and the dollar is being downsized. People are moving out of the dollar. They're moving into Bitcoin. Bitcoin is now considered to be a safe haven. It's considered to be a risk-off investment, which is incredible because when we started back in 2011, when it was $1, it was considered to be the most speculative play in history, right? And now it's considered to be the safest asset in the world, safer than bonds. It's less volatile than bonds than in 2023, safer than the property market. Property market's collapsing. Nobody wants the U.S. Treasury bonds. And into this mix is Bitcoin as a safe haven play.
Bitcoin's recent surge to all-time highs in hyperinflationary regions speaks volumes, underscoring its prowess as a reliable store of wealth in volatile economic climates. In a financial whirlwind where digital currencies clash with traditional fiat, one man's bold predictions have sparked fervent debate and attention. Max Keiser, known for his outspoken views on the intersection of cryptocurrency and global economics, has been sounding the alarm. His controversial yet compelling insights suggest a pivotal shift, where the ascent of Bitcoin coincides with a looming decline in the dominance of the US dollar. As Keiser foresees an era beyond fiat, beyond centralized control, where gold assumes significance, the winds of change signal a monumental shift in the financial paradigm. Stay tuned as we explore Max Keiser's profound analysis, sorting out the link between global financial shifts, Bitcoin's rise, and the dawn of a new economic era. Bitcoin's meteoric ascent.
If the dollar is going down, your dollar price in Bitcoin goes up. So we're very happy to see the dollar go down. Bitcoin is already making new all-time highs in currencies that are undergoing hyperinflation, as we see in Argentina and Venezuela and Turkey. In these places, Bitcoin is already hitting new all-time highs because their local currencies are collapsing.
Bitcoin is better than dollar.
The dollar is it's the cleanest shirt at the laundry, right? It's a fiat money, but it's on a relative to these other fiat monies, it's the less worst option. But eventually, it too will go this way of all fiat money. So fiat money is, we're at the end game for fiat money, which was like a 300-year experiment. And then in 1971, of course, we went on an all fiat money for the world when Nixon closed the gold window here in the United States. So this is all winding down. We're moving toward a post fiat money, post central bank, post nation state world, and gold will have a place in that world. And countries like we said, China, Russia, and others are aggressively buying gold. Central banks still settle in gold, and gold will still be around, and it'll still have a bid, and people will still buy it, and it'll still be a safe haven play. But as Paul Tudor Jones has said, all the dynamics that go in, the macroeconomic dynamics that go into analyzing and projecting where the prices of these things are going, he likes inflation hedges. He says, yeah, gold, of course, is a classic inflation hedge, but Bitcoin is the fastest horse in the race. And, I'm looking at the numbers here myself, and I'm figuring for every dollar move in gold up, you're going to get $30 to $40 in Bitcoin. So, it's a supercharged way to play the collapse of the fiat money world, which includes the dollar. The dollar is really in jeopardy. The country, the United States, is printing money just to pay the interest on the debt, just the interest, right? So that's debt monetization and a debt spiral. And the GDP is not going to suddenly go up 50x to create enough tax revenue to pay down that debt. That in fact, the GDP is shrinking. The amount of the dynamics are horrible. For the fundamentals of the U.S. dollar are terrible, and everyone who's got a portfolio, and there's about $100 trillion under management by portfolio managers around the world, and that game is basically asset allocation. You're allocating your portfolio to avoid risk and get the biggest return you can. And the dollar is being downsized. People are moving out of the dollar. They're moving into Bitcoin. Bitcoin is now considered to be a safe haven. It's considered to be a risk-off investment, which is incredible because when we started back in 2011, when it was $1, it was considered to be the most speculative play in history, right? And now it's considered to be the safest asset in the world, safer than bonds. It's less volatile than bonds in 2023, safer than the property market. Property market's collapsing. Look at all these commercial real estate deals every day. Washington, D.C., all these, New York City, you know, these huge office buildings that were bought for $300 million are going on sale for $30 million. It's like the biggest markdown in commercial real estate. It's unbelievable. And of course, that commercial real estate is the collateral that holds together all the banks that make all those loans. That's their primary business, is making real estate loans. So that means the balance sheet of all the major banks are severely impaired, which means they're going to have to get a massive bailout, which means going further into debt, which means interest rates are going to go even higher, which means the dollar is going to be continuously under attack. And nobody wants the dollar. Nobody wants the U.S. Treasury bonds. And into this mix is Bitcoin as a safe haven play. It separates money from state. It's unconfiscatable. It's cheap relative to gold, way cheap relative to gold, and it's cheap relative to the bond market, the global bond market. It's still incredibly cheap relative to what you could call the total addressable market, or TAM. Total addressable market for Bitcoin is 400 trillion, because that's the total size of the pot of financialized assets on planet Earth. And it's everything on planet Earth that's traded is heading towards zero against Bitcoin, because Bitcoin becomes the global reserve standard.
Bitcoin reshaping the global financial landscape.
The worst possible combination would be that you have a central bank and you have no organized labor, which is what you have in the United States right now. Right. And that's the worst.
Yes.
So, and labor will have no ability to fight the central bank by lobbying for higher wages and higher benefits, and by getting the Democratic side to give them more food stamps. That will never equal the playing field. Their only way to equal this playing field is to get onto Bitcoin. By essentially walking away from the entire fiat money system, central banking system, and going on a Bitcoin standard. And we already see what's going on in El Salvador as a good example of what happens when you go on a Bitcoin standard. So this is the strange world we live in, where there's no differentiation in the economy between somebody looting $900 at Target and somebody paying for something for $900 at Target, because at the end of the day, they're just triggering a $900 bailout in one shape or another, more money printing, and then you've got this Titanic-sized problem sinking into the sea of fiat money abyss. And okay, so the left is completely incapable of doing anything. On the right, you know, I think that's the only place you're going to find some smart people stepping forward. That's where you find most of the Bitcoin support. You know, putting, let's say, RFK aside for a second.
Unlocking investment clarity.
I don't see any other people of that scale, you know, doing shady things. So I think really now the decks are clear for this bull market, this next phase in the Bitcoin bull market to get started and to really take us to the $200,000 to $300,000 coin level.
As we navigate the evolving dynamics of digital currency, remember that knowledge is the compass guiding prudent decisions. Understanding the intricacies of this evolving landscape empowers informed decision-making. Stay tuned for more insightful discussions and analyses. Don't forget to like, share, and subscribe to stay ahead in the ever-evolving world of finance. Until next time, happy investing.